Welcome to today's market report. European stock markets are seen opening a little weaker on Thursday, retracing after sharp gains on Wednesday, with investors fretting over the pace of the economic recovery in the region. The DAX future contract in Germany traded 0.2% lower, FTSE 100 fell 0.9%. CAC 40 in France dropped 0.3%. On Wednesday, the DAX and the CAC 40 both closed nearly 1% higher, while the FTSE 100 posted a gain of over 2%. German prices data released earlier today showed deflationary pressures in Europe's largest economy, with the July CPI figure coming in at minus 0.5% on the month and minus 0.1% on the year. This contrasted with signs in the US Wednesday of the pace of inflation gathering speed, pointing to economic recovery. The 0.6% month-on-month increase in July core CPI was jaw-dropping. Says Jefferies Financial, it was the largest sequential jump since January 1991. While this momentum pricing is unlikely to be sustained, the strength was broad-based and cannot be ignored. In the more positive news, the French unemployment rate fell to 7.1% in the second quarter from 7.8% the previous quarter, much better than the jump to 8.3% expected. More ominously, there is still no sign of a breakthrough in the stalemate in talks over the next US stimulus package. In the corporate news, Thyssenkrupp said a stabilization of some of its businesses helped it to keep the adjusted operating loss in its fiscal third quarter to 679 million euros. Having said in May the loss may be as high as 1 billion. Oil prices edged lower on Thursday, consolidating after gains the previous session on the back of US government data showing a fall in inventories, giving weight to the view that fuel demand is returning despite the coronavirus pandemic. Crude futures traded 0.4% lower at $42.50 a barrel. Brent fell 0.4% to $45.23 a barrel. Gold futures fell 0.4% to $1,940.55 per ounce. On the FX front, GBP USD shrugs off recession fears to keep bounce of 130. GBP USD eases from intraday high of 130.73 to 130.58 while heading into the London Open on Thursday today. Even so, the pair keeps its pullback from the previous day's low of 130.05, although no major positives have crossed wires. As far as the UK is concerned, broad US dollar weakness and the quotes consolidation after 2 consecutive days of fall could be cited as the reason for the latest recovery. Moving on, traders will be strained to search the catalysts amid a light calendar, though US jobless claims and talks surrounding stimulus from America and London, as well as the coronavirus headlines, could entertain the markets. With over 20% of GDP decline, the UK formally entered into recession the previous day, while the same pushed British business leaders and trade unions towards requesting continuation of furlough scheme beyond October expiry. Chancellor Rishi Sunak sees promising signs of late. Talking about trade, Brexit jitters continue with fisheries and level playing field being the latest hurdle. The negotiators will resume the 6th round in the next week. Germany's Health Minister Jens Spahn said on Thursday that they are worried about the rise in coronavirus cases but are confident about the health system. Cases increased by 1,445 in Germany on Thursday versus Wednesday's 1,226. Euro-dollar has caught a fresh bid wave in early Europe today as euro remains unperturbed by the renewed virus concerns. The strength in the major is mainly driven by the extension of the decline in the US dollar across its main competitors. According to the UOB Group, euro-dollar is expected to keep navigating within the 116.60 to 118.80 for the time being. The dollar index today was down 0.3% at 93.157. Dollar yen was down 0.2% at 106.72. This is today's market news. Thanks for listening. We'll see you next time.